Algorithmic trading sounds very complicated, but let me break it down for you. It is when you use a computer program to make investment trades for you. Think of it like a robot that follows a set of rules. You tell the robot, if this stock goes up by $1, buy it. Or you might say, if this other stock drops by $2, sell it immediately. The computer follows these instructions, called an algorithm, without any emotion. It can make hundreds or even thousands of trades in a single day, much faster than any human ever could. This speed is what attracts many people to it. The rules you give the computer can be simple or very complex. For example, a rule could be based on the price of a stock, like the examples I just gave you. Or it could be based on more advanced things like trading volume or even news headlines. Professional traders at big Wall Street firms use extremely powerful and sophisticated algorithms. They have teams of experts who build and test these programs constantly. The idea is to remove human error and emotion from investing decisions, letting the cold, hard logic of a computer take over and hopefully make a profit for you. Now you might be thinking, Suze, that sounds great. A robot that makes money for me, and I hear you. The promise is very tempting. Companies now sell these trading programs or bots to everyday people like you and me. They market them as a way to get the same advantage as the big professional firms. They show you charts with lines that only go up, suggesting that you can just turn on the computer, walk away and come back to a pile of money. It feels like a shortcut to financial freedom, bypassing all the hard work of research and learning. But here is where you must be so careful. What these companies don't always tell you is that these systems are not foolproof, not even close. The markets are unpredictable, and a simple set of rules that worked yesterday might completely fail tomorrow. A sudden market crash, an unexpected political event, or even a simple technical glitch can turn your money-making machine into a money-losing disaster in the blink of an eye. You must understand that just because something is automated does not mean it is safe. In fact, its speed can make it even more dangerous. So why do so many people, especially beginners, get drawn into the world of algorithmic trading? The answer is simple. It promises to make a very difficult thing seem very easy. Investing can be intimidating. There are thousands of stocks, bonds, and funds to choose from. There are charts, financial reports, and expert opinions that often contradict each other. It feels like you need a special degree just to understand it all. So when a company comes along and says, forget all that, our robot does the work for you, it sounds like the perfect solution to a very big problem. This promise of easy money is incredibly powerful. We all want to build wealth for our future, for our families, and for our retirement. We see stories online of people who supposedly made a fortune overnight using a special trading system. These stories are designed to make you feel like you are missing out on a golden opportunity. They play on your fear of being left behind. They make you think that if you just had this one secret tool, all your financial worries would disappear. This is a very strong emotional pull, and it can make smart people do not so smart things with their money. Another reason people are tempted is the idea of passive income. The dream is to set up your algorithm and then go live your life while the computer works for you. You imagine money flowing into your account while you are at the beach, spending time with your kids, or sleeping. This is the ultimate financial fantasy, isn't it? The problem is that it is almost always just that, a fantasy. True algorithmic trading, even for the professionals, is not passive. It requires constant monitoring, testing, and adjusting. The market changes every single day, and an algorithm that is not updated can quickly become useless. Finally, there is the technological appeal. We live in a world where technology solves so many of our problems. We have apps for everything, from ordering food to navigating a new city. So it makes sense to think there should be an app that solves investing for us too. The companies selling these bots make them look sleek and easy to use, with simple dashboards and big green buttons. They hide the complexity behind a friendly interface, making you feel like you are in control when you are actually handing your money over to a system you do not truly understand. This is a dangerous illusion. Now, let's talk about the traps. The biggest and most common trap of algorithmic trading for a beginner is how quickly you can lose money. I am not talking about a small loss. I am talking about wiping out your entire investment account in a matter of hours or even minutes. Because these programs trade so fast, they can also lose money just as fast. A small mistake in the code or an unexpected market event can trigger a chain reaction of bad trades. Before you even have time to react and turn the system off, the damage is already done. This is not investing, it is high-speed gambling. Another major trap is called overfitting. This is a fancy term for a simple problem. It happens when an algorithm is designed to work perfectly on past data. The seller will show you charts proving how their bot would have made a fortune during last year's market. But here's the secret. The past is not the future. Market conditions are always changing. An algorithm that was perfectly tuned for 2024's market might be completely wrong for 2025. It's like building a car that can only drive on one specific road. As soon as you turn onto a different street, it crashes. Then there are the technical failures. What happens if your internet connection goes down in the middle of a trade? What if the trading platform has a glitch? What if there's a bug in the algorithm's code that no one noticed? These are not small problems. A technical issue could leave you stuck in a losing position, unable to sell, or it could cause the bot to place hundreds of incorrect orders, racking up huge losses and transaction fees. You are relying on a perfect chain of technology to work every single second, and in the real world, technology is never perfect. Finally, you must be aware of the costs. Many of these algorithmic trading systems come with high fees. You might have to pay a monthly subscription for the software. Then there are the trading commissions. Because these bots trade so frequently, the commissions can add up very quickly, eating away at any potential profits you might make. In many cases, the only person guaranteed to make money from your algorithmic trading is the person who sold you the software and the brokerage that is collecting all those commissions. They profit from your activity whether you win or lose. After hearing all this, you might feel discouraged. But you should not be. I am telling you this not to scare you away from investing, but to guide you toward a smarter, safer path. For the vast majority of people, the best way to start building wealth is not through risky, high-speed trading. It is through slow, steady, and diversified investing. The first thing you should consider is a low-cost index fund or an exchange-traded fund, also known as an ETF. These funds let you own a small piece of hundreds or even thousands of companies all at once. When you invest in a broad market index fund, like one that tracks the S&P 500, you are not betting on a single company to succeed. You are betting on the long-term growth of the entire US economy. This is a much safer and more reliable strategy. You don't have to worry about picking the right stock or timing the market perfectly. Instead, you can use a strategy called dollar cost averaging. This means you invest a fixed amount of money on a regular schedule, for example $100 every month. This simple, automated discipline is the most powerful tool a beginner investor has. Another approved and smart step is to open a retirement account like a 401k if your employer offers one, or a Roth IRA. These accounts are designed for long-term growth and offer incredible tax advantages that can help your money grow much faster over time. Inside these accounts, you can hold those same low-cost index funds I mentioned. The key is to start now, contribute regularly, and let the power of compound interest do the heavy lifting for you over many years. This is the proven path to a secure retirement, not some magical trading bot. Before you ever put a single dollar into any investment or financial tool, you must do your own research. Read books, listen to trusted financial experts, take a course. The most important investment you will ever make is in your own financial education. Never, ever trust your hard-earned money to a system you do not fully understand. There are no shortcuts to building lasting wealth. It takes time, it takes discipline, and it takes knowledge. So be informed, be patient, and make choices that are approved for your long-term financial health. That is how you win the money game.